Hi there guys, in this video we are going to talk about market seasonality, how you can benefit from it, and how you can use it in your advantage to identify low risk and high probability trade setups, and how popular traders made their millions with a few simple tricks. In the end of this video, I will show you paid and free applications that you can use to recognize different types of seasonalities and use them in your favor. So let's get started. Market seasonality, also called calendar effect, is a strategy that you buy or sell certain securities at a fixed date of every year and close the position at another fixed date. These strategies have been applied to both equity and commodity markets. One of the most famous seasonal trade in equities is called January effect. There are a lot of different approaches for this seasonality. One of them is that small cap stocks that had the worst returns in the previous calendar year will have higher returns in January than small cap stocks that had the best returns. The idea behind this pattern is that investors like to sell their losers in December to benefit from tax losses, which creates additional downward pressure on their prices, and when this pressure disappeared in January, the prices recovered somehow. Basically, this is a typical mean reverting strategy mixed with seasonality. A lot of the famous traders use the market seasonality to build their wealth in recent past. One of them is Larry Williams, for example. You know that we've talked before about his 10,000% return for a single year and about his money management strategies. What we did not mention in our previous videos is that market seasonality was one of his key points for these extraordinary returns. He is famous for finding the best day of the week to buy and the best day of the week to sell. In his book, Long-Term Secrets to Short-Term Trading, he describes about the strategy which buys S&P 500 every Monday and sells it at the end of the day. In the same book, Larry does two backtests, one from 1984 to 1998 and one from 1998 to 2011, so that we can see that the pattern is still there after all these years. So let's get started with the first set of data. We can see that the worst day to trade S&P 500 is Thursday, with 404 trades, with win percentage of 50.99%, average win of $615, and average loss of $767. Profit to loss ratio is 0.8. The average trade would be in a loss of $62. The maximum loss is $4,675. And if you have traded this strategy for this period, you would have lost $25,000. You would be devastated, right? At least I would be. On the other hand, the best day to trade S&P 500 is Monday, where if you traded this strategy from 1984 to 1998, you would have gained over $66,000, which is a lot better than trading Thursdays, right? With trading Mondays, you would have 385 trades for this period, 60% win rate, $723 average win per trade, and average loss of $650. Profit to loss ratio would be 1.11, the average trade would be $174, and the maximum loss of $3,450. With our second set of data, in the same book, we can see that the pattern is still there, even all these years. Again, if we have traded this strategy for the period 1998 to 2011, every Monday, we would have gained over $100,000. Pretty cool, right? Again, the worst day of trading the S&P 500 is Thursday, where if you have traded for the same period, you would have lost over $14,000. By the way, I'm going to leave a link to the book down below, and if you want, you can buy it out. It's one of my favorites. Schwartz is another example of super performer using market seasonality. Schwartz, a former Marine Corps captain, is a Wall Street stock trader who made fortune during his career. He also gained popularity when he won the US Investing Championship in 1984. He's also famous for turning $40,000 account into over 20 million without realizing drawdown of more than 3% in every single month. One of the tools that Schwartz uses is the historical performance of a given calendar period. He regularly refers to the Trader's Almanac, which provides data on the distribution of returns. Schwartz also digs deeper by looking returns for specific days of the year, and again, these stats are included in Stock Almanac. We are going to present a little bit more about Stock Almanac a little bit later in this video. Also, the YouTube channel Financial Wisdom made a great video review of Schwartz's book called Pitbull, and I highly recommend to watch the video as well. It gives all of the tools that Martin Schwartz used to gain his fortune. I will leave link to the video in the description below. Something that you have to have in mind is that the seasonality pattern is not a signal by itself. You have to have some kind of a confirmation to see if this seasonality is going to happen or not. What seasonality does for you is that it gives an advantage when you want to execute your trade based on your strategy. Also, you have to know that seasonality works best in commodity trading. That is perhaps because seasonal demand for certain commodity is driven by real economic need rather than speculations. There are a lot of different seasonalities and strategies around it. So let me present you with some inside information how you can find your own seasonality and exploit it. One of the websites that I want to share with you is SeasonX. It has limited free version and paid version, which gives you a huge amount of seasonality patterns. Unfortunately, in this website, you can find only monthly patterns. Also, in the application, you can find information like annualized return, win percentage rate, and history for every year that your pattern occurred. You can test out currencies, commodities, stocks, indexes, and even crypto, with paid version of course. Another application that you can use, but it's paid, it's Stock Almanac. If you subscribe for them, you will receive successful short and long-term trading strategies, profitable ETF and stock trading ideas with specific buy and sell price limits, and even more. They even have history on their returns through the years, and they look really promising. So let me present you with one more application which is free and can help you find your seasonality pattern. The website that I am talking about is seasonalcharts.com. They are powered by SeasonX, but they have a little more information like weekly patterns and even daily patterns. You can find charts for currencies, for indexes and commodities. Everything in the website is well organized and easy to read. If you want to build a strategy based on seasonality, I can recommend you can start from here. And the last application that I want to present to you is stockcharts.com. On the website, there are a lot of different features, but what we need from it is the seasonality charts. There, you can see that you can select a symbol, and after that, you can search for market seasonality pattern for that symbol for over 20 years back. What the graph will show you is the percentage of a month which closed higher than it opened. Well, that's about it from this video, guys. I hope you liked it, and if you do so, please like, comment and subscribe, and see you next time.